The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi folks, Basil Chapman singing for Larry, and my pleasure to be here. Usually I do the 11 o'clock till 12 o'clock show, and Monday through Friday. So it's just a great pleasure to be able to sit in for Larry. And we're looking at a very interesting market. Dow's down 55, S&P's down 3.5. Now, Michael, I meant to mention this in my show that I usually do, the 11 o'clock to 12 o'clock show. I usually talk about the market and what I'm looking at. I got into a whole bunch of details. What I forgot to mention was, I even forgot to mention and say to my subscribers on my opening call this morning, but I always remind them that sell signals can happen technically, but to increase that, to upgrade it to a sell mode, you have to have two things. I mean, just if you just kept it as simple as two things for the past 6 years, or at least since the March low of 2009, 5 years, you would have been able to say, when the VIX keeps going lower, it is buying pressure. And if there isn't bad news to accompany a higher VIX, the market should drift upward. So just keep it as simple as you can. So right now, we have all the signs in the Chapman wave methodology of some kind of at least a short-term top unfolding. Let me explain that. Let me just go to this chart right here. Very simple technique. I should have put that on. I'll put it on while we're doing the show. Well, just here we go. Pop that in. What am I doing? I'm popping in my CD book called Introducing the Chapman Wave Methodology. Most importantly, when you get to the fourth highest peak from a most identifiable lower low, that is where you can expect some kind of a consolidation to take place. It can be very deep. It could be shallow. It could reignite. It could actually start a brand new buy mode. And that would be very important. Of course, doing two things at once means that I put my code in the wrong way, but there it is, correct. And the simplicity of just looking for the lowest low bar, and then let me just find one here. We could do this one, all right. And then identify where the bottom arrow is the arrow that points up, and then the top arrow. For instance, here I'm showing on slide 25 of 476 slides. This is the semiconductor index. And look, the whole idea is to be able to identify the most obvious low bar on the left. And there it is. Isn't that nice? There's the lowest low bar on the left. There's the lowest low bar. There's the lowest, but it's got to be after D. And there it is, after D. After D. And after that, go to a G. It's unusual, but it can go to a G. So the identification makes it very important. Well, on the 7th of March, we went to 16,505 at a peak F, the sixth highest peak from the lowest, most obvious low bar, which was way back, I think it was the 12th, back in early February. And it formed a pattern that I call the Chapman wave stalk leg. It makes a long leg up that's made up of many peaks. It's a single push to the upside. Then it makes an oval pattern, kicks out, goes to from the body, above the body high, starts the pattern, makes the head pattern, plop, it comes down, makes the beak. Well, this is exactly what's happened here. I haven't drawn it in. I've drawn it in over here. So let's just do this and we'll show you clearly. Right there. Look, this is the Dow chart. And there's that body. And we're making the leg. We made the leg, the body, made the neck, and we might be making the head right now, which says there should be a test of the 16,620 level. And that's going to be the big test of inner strength. and right now the low so far today is 16,651. So we're 30 points away. Isn't that interesting? So that's the simplicity of the methodology. Now, let's just go on. And when I'm looking at the weekly chart says we're in leg C. And in this particular instance, leg C of a weekly chart implies there should be a D. The last D saw the biggest pullback, both in the daily and in the weekly. You've got examples. So I'm suspecting that the S&P is going to be the clue here because it's the only lagging indicator right now, having only gone to a C, that still has to go higher, even if it's nominally higher. By tomorrow, I'm suspecting that maybe tomorrow we get a spike up, or first Friday on some economic news, and maybe we actually get a reversal on Friday where you've got options expiration and anything can happen. Pop up and drop maybe, huh? So what I'm looking at, the parameters are very simple. 1902.17 was the high yesterday. If there's no new high today, it makes a peak C. I'm suspecting one quick pop to this trend line right here, right there. And that could take you to about, that's tomorrow, right? To about 1904.80. If it holds and closes and goes even higher, that's important because it's going to drag the Dow, maybe a leg F. I don't see a recycle at this particular point. So I'm in the camp right now that says, and this is what I was talking about earlier. I wonder if I finished that thought. When I was talking about bonds, the idea that I went off into automobiles and the auction that took place, I don't know, was it Christie's or what's BID, bid, Sotheby's? I'm not sure. But I went off only because of the colors of the chart. But my thought process was, no, I think I mentioned it, that if bonds are going to continue rallying, if the dollar is going to continue rallying, and if the VIX starts to rally, that's going to put pressure on stocks. The dollar would possibly impact those multinationals, and many of them are right at topping areas. Maybe we'll look at them in a few minutes. So I'm in the cautious area. And the S&P, funnily enough, has gone to a leg D in its weekly chart. Let's do I know Larry often likes to talk about the New York Stock Exchange. Well, the NYA it made a peak D yesterday. There's no new high today. But the weekly is also, and I drew this pattern a long time ago, New York Stock Exchange Weekly has made this very powerful rising V-shaped pattern that keeps pushing the price towards what I call the inside track. What's the inside track? Let me show you something in my CD introducing the Chapman Wave methodology. We go to View. We go to Edit, Find, and we go to Inside Track. Now look at this. This is a chart of the Dow back in 2003. This is a daily chart going into October of 2004. Do you see that at a certain point you've got rising lower highs and lower lows, but that actually forms some kind of a channel, and that channel has within it another little channel, and I call this dashed line, I actually have changed colors now over the years. What I do is I make the outer line green, because if it breaks above that, that's actually very positive. I make that inner line right there, the dashed line, I make it red. The dash, but it's red. Why? That's the repellent zone. And on the bottom, I make that usually red, and inside it, I make it green. Why? Because that's the buy zone. If it hits that buy zone and it's able to hold and bounce, that's very important. That's good action. So when I'm looking at that kind of, let me just check something here. No, it didn't. When I look at that kind of action, I'm saying to myself, the New York Stock Exchange, 1,860, I think, stocks, has a little way to go over the month of May. and they could take it after this consolidation is done in the weekly chart, making a peak C, because next week there is no new high in both the Dow, the S&P, and the NYSE. My suspicion is, and I'm going to include the XMI, which is in leg D in the weekly chart. Look at that beautiful chart. This is made up of a mix of defensive, I think it might have Philip Morris or something like that, and cyclical stocks like maybe a Boeing. It's a real mix, cyclicals. So this is saying it too needs to make that D. It could just be a pop-up and then a failure. There's that inside track. So we're looking at it in many different forms. I wanted to bring up the rising VIX. If it has to rise a lot and sustain a rise. At this point, it's at 12.07. It hasn't even gone to the 1220s or 30s yet, which will already be the indication that this market is going to dip further. So I'm looking at this and I'm saying there's a rotation going on. If stocks like an Amazon can suddenly find strength and move higher, well, the cap Dow type stocks take a breather, I think that would be fabulous. And then we would get that leg D up in the weekly chart, and sometime towards the end of May, we make a top that I would consider to be a top of some significance. I'm now talking about a top. It has the potential for double-digit decline. I don't know if this is the time. It could happen now, but I need to see those Ds in the weekly chart. Why we get very, very cautious. And at this point, I'm cautious, but there are areas that could still have a bit of a balance. And we'll see. For instance, look at the XAL, which is the also peak C, and both the daily and weekly, and that's the ARCA airline index. But unless I recount this, I have an alternative wave count. If this is a leg F in the monthly, now I'll introduce some monthly charts, because in looking at the indexes, I think it's really important. Look at this, the IY, the consumer cyclicals. It's gone to a peak E. It's held very nicely. It's forming either an oval or rectangle formation. And the consumer cyclicals, I'd have the list right in front of me. I don't off the top of my head remember all of them. I think Costco has that kind of stock in it. I'll have the list maybe tomorrow. I'll remember to put my list out of all the other components. I could do it, but I don't feel like doing it right now. But when I'm looking at this, I'm saying to myself, gee, that's getting very overextended in the monthly chart. If I'm looking at the, look at the S&P, SPX.X, look at that monthly chart. Just a steady move up, bumping up against the inside track resistance. Well, it's getting, the candles are getting smaller and smaller. It's getting more and more difficult to hold. I'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, Visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, we're back, and I'm sorry, during the break I was all over the show for my look at the charts that to discuss, so I don't remember where I finished off, but I'm going to say that the volatility index is in week 14. Let me just check that. 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14. Week 14. Other times, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 was the week before a big spike back on the week of the 17th of January of this year. Week 14 was the very big spike that already occurred. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 14 was right there. So we were already on our way back in October. So October, the week of the 4th, I think it was actually September. Going into the week of the 4th, we went to 18.71. And then there were other shorter-term spikes that failed. But the other one, big one, is the one that comes from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Sorry to move over there. So historically, is that correct? Should I say historically? Yeah, it's history. We're looking at history, even though it's fairly recent. Recent history suggests that we are getting really close in the VIX rhythm of spikes to some kind of a spike. That also says to me that the downside of 11.88 made 3 days ago, I would not be surprised if the worst that we see in the VIX over the short term before there's a pretty good rally that goes about 1277. 1277 would be the 9-period exponential moving average, would be the 1160, 1182, 1169 low that was made way back at 26th of December of last year. So that's the way I'm looking at it right now. I'm also suggesting that if one had something, you've got to realize if you buy something like the TVIX, which is 200% long, the VIX, whippiness, the zappy is fine, but it gets reducted every day, so that all of a sudden you land up with something that should be moving higher, but because it's recalculated, I think redacted is the best word. You know, in legal terms or in political terms, when the White House, any White House, is going to give out something, they redact. And what does redact mean? We take out anything that is not relevant to the pertinent question or anything that we might think is relevant. So in this particular instance, the VIX is subject to the VIX indexes, not the VIX itself, the ETFs, ETNs actually, are subject to shrinkage. So you've got to be prepared for that. But you want to be ready with something a little bit. I would suggest having some kind of insurance like we have for my subscribers. We've been long quite a while. We've had a particular short in one of the sectors that I consider to be one of the most vulnerable. We're able to short it almost at the top, and we've held that core position even though we've been in and out of both long sides and short sides in between. And I hope to be able to get back to add to the short side in one way or another of this particular sector. But I'm waiting a couple of days just to let the oversold condition wear itself out with a bounce. So here we are. We're looking at the volatility index at 1205. It's down 0.08. And I'm suggesting that, yes, is this going to be one of those ETFs where you suddenly get a notice in the mail to say, oh, by the way, your ETF is going to be recalculated 4-for-1 so that your $5 or $6 or $7 ETF is going to be 35 or 40 or something like that. Same, you know, when Apple says it's going to split, it's the same pie. It's just cut into different pieces. This is the other way around. They stuck the pieces together to make one bigger pie. So Dow's down 63. Let me explain what I might. To go back to this chart right here of the Dow. 16,598 is the 9-period exponential moving average that hasn't been taken out since it had a plunge, the ugly day on the 6th of May. Otherwise, it's held beautifully above it. I'm thinking that the Dow could have a consolidation. It could even go down to the 16,400s, and we should take 3 to 5, maybe 1 week at least, of lower highs. And then we have that move to the upside to conclude the weekly chart. But weekly charts can take weeks to actually unfold. So let me come back straight after this break and discuss. We'll go to the question of the day about McDonald's. We'll look at some Dow stocks to see where they are. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Basil Chapman, Dow's down 65. S&P's down 4.43. You see, when 30 stocks, that's the Dow, down more than the S&P, my preference is to give greater weight to the S&P. You know, sometimes I say the Dow is up 0.78, the S&P is only up 0.65. 30 stocks are going to have a tough time holding 500 stocks higher. It doesn't work that way. And then later in the day, we see that the market gives back a chunk. So I'm looking at this and saying, I'm seeing internal strength right now. The Dow should be down 65, with the S&P down 8. It's only down 4. So there's internal strength. That's why I think we're still going to get. Could even, let me see. Now I can't do any trading right now. So, so inner strength. Okay, let's go back to the McDonald's. McDonald's is making that pattern that I always talk about, one that is my least favorite. Not that it isn't a pattern you've got to recognize. It's just that when you do, a few minutes here, let me just finish this conversation here. When you look at the pattern, by the time you recognize it, much of the work has been done. And I always find that they fail. The cup and handle pattern invariably pops above the previous left side lip. That's how you get that pattern. And then it comes back again. So it's just one of those patterns. It's like an inverted H that goes to a smaller little H to make an M pattern. You can expect that there could be, in fact, be a bit of a bounce at some point, because it wasn't able to rally much higher, but it also wasn't able to fail. That's kind of what happens. It's narrow. The internal energy is being usurped by time. So think of it that way. So I look at this, and this is one of those cases. I do not own McDonald's. I have been to McDonald's for a long time. Not that I've got anything against McDonald's. It serves a purpose. Just haven't had any need to go there. And I look at it and I say, okay, my weekly chart is going to be more important right now, but let me show an alternate count. Even though it was a perfect peak F at the top, 6 peaks higher after the buy signal, and this is a restart. Let me just show something to those of you who are not used to my work. That is a peak E back in 2007, December, December, at 63.69. It happens to spike higher and then collapse. I put an upside down V. That's just to indicate I got the sell signal, I got a down arrow, the stochastic fell, the MACD went negative. But when you look closer, you'll see the MACD actually was holding right up against the slow-moving average, the green line. And that allows for one quick pop-up, which it did. So it goes to a peak F back in August at 67 round number high. Let me just put that in here, 67, just as a point of note. And then it plunges. And it plunges down to the 46 round number low. Thank you, McDonald's. 46 round number. I used to have these all typed in. It wouldn't be a surprise to me. What I wanted to show is that 46 round number low gets the up arrow. But then it rallied to a peak A, then fell, and then started a brand new buy mode, and then buy signal to buy mode. That gets the plus sign. I'm just trying to explain for those of you getting used to my notations, and I'll explain them in greater detail. Then it goes peak A, B, C, D, pulls back. But there's a chance that I could also put, the MACD did not turn negative. That's why it was a perfect E to an F. So what do I call this? That has to be G/A, but the latest high made just a couple of days ago says you don't get H's. So what do you do? Well, first of all, I would ignore it for now because I'd be looking at the weekly chart, but that's not good enough. You need to know what do you do if you're doing Chapman wave methodology. I would immediately go A, B, C, and say that's my alternate count, D/B. And let me explain it to you. I'm going to change the color so that you know what I'm doing. There's pink. Let me see if it came out pink. Pink. Okay, yep. And this is going to be pink. And that's going to be pink. And that's going to be pink. And it says to me, okay, mister, now you're ready for anything. Because if it's a D, even though the MACD could turn up in a W formation and be very powerful, even though stochastic is a little vertical right now, so it needs a little time, but it could break out, you are ready for anything. You're ready for a pullback. And that's going to come to you from the weekly charts. The biggest thing is, if you are a long-term holder of McDonald's, MCD, trading at 102.74 right now, down 79 cents, you kind of want to know, after all, you've held the stock through thick or thin. Why should what on earth would make you want to? Now the economy, everything seems to be turning back to positive again. Remember, that's when I always get the most nervous, when everything's running on all cylinders. That's when you start to get news that kind of breaks the bank. Now, what I do is the weekly chart, and I say, okay, there's your cup formation. Previous high was 103.70. So far, we've gone to 103.78, 8 cents higher. That puts you in the category of potential double top. Watch out. At the same time, you've got to be looking for negatives. Now, why on earth does that happen? I've just got to ask them about this. I'm having such interesting situations now. So I'm going to get rid of that, which frees up this. And now I can take it. There you go. So what I'm looking at here, I wonder if this is a left side, right side price time match. It doesn't matter. So this is the move to the upside that is very important because it's retesting in a beautiful long-term bold formation and it could be a breakout to the upside, but it's in leg D. And in a cup formation, you need a powerful spike that closes way above the left side lip of 103.70, in this case, to say that you've got a cup and ladle breakout. Geez, I just got the cup and handle. Now you're introducing me to the cup and ladle. What's the difference? A cup and handle tests the left side lip in the cup formation and then fails, doesn't break out, doesn't hold a breakout. That's what happened in the monthly chart. Then it does it again. We'll see in the end of May if this is able to hold above 102.22, the high back in December of 2011. So now what we're looking at, there's nothing here negative except for the candle today in the daily chart. But the weekly chart is nothing really negative because the MACD is expanding. Stochastics at 93%. So McDonald's is still looking good. See what I'm talking about, the rotational aspect of this market? How about we go to that, and then we look at a stock like, Google was on my mind because yesterday someone mentioned that there was a round number. I went through my work here. I don't see any at 511. I didn't get anything. 511 low. Round number. I didn't get any 511s. So I might have made a mistake in what I read, but I didn't see that. So look at Google. Google went to the top straight up in the weekly and then came straight down as attempting to make some kind of a base. Look at the monthly chart. There's a big difference because it's testing the 9 EMA. The MACD is turning down, hasn't crossed negative, but the stochastic's gone under 80%. So it's saying that this is a different chart at the high than something like the McDonald's we've been looking at, which is persevering with a high-level consolidation. So I have to respect that the daily chart should still make a D, and I think it will, and it should be either this week or very early next week. That's a higher high. It will be a higher all-time high. If there's a doji candle on Friday at the close, imagine that it closes somewhere around where it opens. It opened this week at 102.93, and it closes somewhere around 102.93, 103.20, somewhere around there. Maybe a little lower, maybe a little higher. If next week it takes out decisively the high of 103.78, the high of this week, and closes there, and is able to close 2 out of 3 weeks higher, that's going to really improve the monthly chart. If, on the other hand, next week, McDonald's suddenly slides under 101 to 100 support, that's that 1 point support, with 100 being absolutely key, closes below that, says watch out in the weekly chart. We could be, watch out in the daily chart. We could be setting off a move back again from this whippy up and down move that says, I'm going to test the 98, was it 98.89 low of the 22nd of April. And if I take that out, this move, at least for the short to maybe even intermediate term, is done in McDonald's. So far, that hasn't happened. So far, it looks good. So let's go to our next caller. We've got Brent in Martinez. Hi, Brent. How are you?
I'm doing great, Basil. How about you?
I'm doing well, thank you.
Wanted to thank you for your help on Deere yesterday.
Wow, look at Deere. It's down 2.51, down 2.68 at 91.10. Remember the rectangle we were looking at? So I said that somehow or other that rectangle is very important because it's gone to the top. That could very well turn out to be an E, which I typed in there with a little inverted V shape. And the earnings did come out or still coming out?
They came out this morning.
That's why I saw it wiggling around like that. Okay, I actually saw it just down 1 point something. Now it's down 2.45. Now what's really important about that is the 91.18 low of the 11th of April. Today's low so far is 91.05. The MACD's turned down, stochastics turned down. It's treating the rectangle now as very strong resistance. And it's also saying peak E in the weekly chart is probably going to be unfolding. And you remember what I said about that monthly, because it's longer term. We've got a peak C and then another potential peak C if it didn't go above. Oh, this is so interesting. 95.60. Today's high is 94.89. Whew. This is going to be so interesting because at some point, if it just has you'll be out of the stock by then. You're in the put position, right?
Yes.
Wow, wonderful. Well, I'm looking at this and I'm saying if it holds the 88 area in May and then has a rally in June, if it breaks above 95.60, that's going to be a very powerful move. It might even retest the all-time high of 99.80, which makes a close under 88 really important, because a close under 88 in the next week would say watch out, because it keeps going down from there. The monthly chart has major trend line support at 87, just a little, or 80, depends when it is. Let's call it 86.50. So this is a really important moment for Deere, and you caught that beautifully. Congratulations.
It actually gave you a chance this morning to get in and buy the puts, and that's what I try to do. So
that's what you were talking about. Your actual methodology. To tell you the truth, when you said it to me, I thought to myself, how on earth how can Brent even think about getting a put if the earnings, if it doesn't give you a chance? But it did. It went right to the 9-period exponential moving average of the high of 9. It opened at 94.01. It at 93.22. Wait, how can that be? No. It opened at 92.49. Popped up to 93.22. 93.15 is the 9-period exponential moving average. It hit it exactly. And now it's trading down at 91.09. This is a very ugly candle. Hey, congratulations, friends. But that's not what you wanted to ask me about. You wanted to ask me about something else.
Well, now I'm moving on to my next potential target, which you kind of mentioned. I've been watching it myself, and you mentioned it in the newsletter this morning. That would be Advanced Auto Parts.
Correct, yes.
And again, I'm doing a similar deal, hopefully tomorrow. They have their earnings before the market opens tomorrow, so I'm hoping to do a similar type of trade, but I just wanted to get your opinion. And again, I'd be doing puts.
This one has a much... Now, how can I put this? This one has a much clearer picture to my eye. But that's not to say that it's going to trade that way. Let me explain what I'm looking at. Folks, we're looking at advanced order parts. Remember just a short while ago, I was talking about AZO, which is the big daddy of this whole sector. Advanced Order Parts, Inc. AAP is trading at 123.54. Oh, isn't that nice? 12354. Should it be 12345? Maybe if we wait another second or two, it'll be 12345. And the monthly chart is gone already. I'm calling it E/C because it made a high. This is so fascinating. It made a high of 129.99, missed the round number 130 by a penny. And then the next month, which was last month, the high was 128.49. That's what I call a 2-bar reversal. I love to see it in weekly and monthly charts. But then it held well, and that's the big question. So let me do a little work on my 120-minute chart. We'll be back with Brenton Martinez, California, looking at Advanced Order Parts. The Dow is down 56. S&P's only down 3. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi folks, Basil Chapman sitting for Larry Pesavento and Trade What You See. My service is the opening call. Check it out, front page of TFNN, 2 weeks free, and this is just a perfect time because we're in a transition phase right now. We're on with Brent in Martinez, California. We're looking at AAP, which is Advanced Auto Parts Inc., looking at the whole sector, GPI, Group 1, I think it is. GPI, yeah, Group 1, Genuine Parts, whatever it is, GPI. That's one of the better ones right now. AZO is starting to weaken, and AAP is in that category. And I'll explain real quickly. Peak C in the daily, peak C in the 120-minute chart. It looks to me like there is a chance that we might get the same thing tomorrow, that it pops up and then it fails. It doesn't have to even pop up because this is a retracement failure mode. It is way under the 128's previous high. So this doesn't have to get to D at all. I'm just saying that it doesn't have to, especially this is what I'm looking at. The weekly has that pattern of falling axe. It looks to me that it becomes an arch formation. There's a greater chance, if there's any failure at all, there's a chance that the arch formation will see a real quick pullback under, it's at 123.47, under 121, and that's going to be the clue. If it drops under 121, this thing is going to go much deeper down. Most importantly, if it pops up, watch the 120, 125.60, 125.70 starts leg D, and anytime it could reverse after that. So those are the parameters I'd be looking at. Most important thing is if it starts to trade in the 126s and holds into the session tomorrow and Friday, that I have to term some kind of a breakout from the resistance, and then shorting says, hey, maybe not quite yet, because the stochastic at 80% is going to flatten out instead of reversing back down to under 76%, let's say, if it turns around tomorrow. So those are the parameters I'd look at, but you know how you trade, so all you need to do is keep my parameters in mind. I haven't yet got the signal in the monthly chart, but the weekly is saying, wow, you just need to close under 120, at 122, 121 support, and that goes into a sell signal to sell mode in the weekly chart.
Okay, that's very helpful, Basil. I really appreciate it. We'll see.
Good.
I'll check the numbers tomorrow and take it from there. So,
thank you very much. Good luck and fabulous trade that you just had, and I must congratulate you on that. And good luck with this one. Thanks for calling, Brent.
All right, take care, Basil.
Okay. Now, I had a couple of quick questions. The first question was, I've never looked at this. This is Live Nation, LYV, so I just did a little work on it during the break. It seems to me that the peak D in the monthly chart has held okay. MACD is good. I would not be surprised if it cannot get above 2480, the all-time high. Most importantly, the weekly chart is saying if it, at 2239, if it closes under 2150 in the next week, that's going to be an arch formation, and that's like a right shoulder failure pattern as the MACD starts to head back down. So leg D in the daily, because it's made a peak C, would be above a 2230, so 2330. 2331 would start and move up. So let me just do this and about to wrap up. You've got a fabulous show coming up with Daryl Martin. So let me just do this. Don't forget my service is the opening call. We do have long positions. We added to our short positions now, so we've got a real mixed portfolio of longs and shorts. We'll see how the longs can hold up here. Most importantly, I'm just going to use the Dow for a moment. The Dow says it doesn't have to make a new all-time high, but if it does, if it just squeaks above 16735.51, that was yesterday's high at peak E all-time high. Peak E, if there's no new high today, I don't think there will be, even though there could be a rally later on. That says I'm not expecting much more than maybe 16,750. If by next week the Dow's trading under 16,550 to 16,500 support, that says we've made a short-term top. Be real careful. Thanks for being here. Stay tuned for Darryl. I'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.